All right, guys. Sorry I didn't get a chance to make this earlier, but when you guys requested explanation, I was on my way to work, and I'm gonna just go through what happened today. All right. So let's get this kicked off. Today was a very huge day um, for the macroeconomic side for pound pairs, right? So I've showed you all where to check news. You go to your economic calendar, right, on my Forex, my FX books, or you could go to Forex Factory and look at the economic calendar for the week or for a specific day, etc., etc. Okay, all right. So first thing you want to ever do before you trade is watch the economic calendar. Okay, see, every day news is released, and there's two type of people in this world: people who watch news on TV and people who make money off of news. Right, that is us. Okay, because we are in the forex market. You see, the market cannot move without news. That is a fact. News is like the engine behind the market, right? It is propel the market, give it velocity, and the market just travel and then run into resistances and bounce around via price action, all right? So this was what happened this morning. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pound news coming out at 7 a.m. that came out at 7 a.m. at the same time. Now, guys, all of these news, right, dealt with basically, really revolved around interest rate hikes. Okay, the interest rates by the bank, by the Fed. Well, their Fed, which is the banks, basically, right? The banks. Let's call it the banks. All right. I'm no macroeconomic specialist, but I know when I see 10 reds in a row, um, I'm gonna pay attention to this, right? So this is what happened, right? So we trade pound pairs, right? Everyone should have on their trading view, okay, a watch list for pound pairs, right? And here's your pound pairs, right? You have GBP USD, GBP CAD, GBP Yen, GBP Aussie, GBP Chef, GBP NZD, which I do not trade. Okay, so let's examine what happened this morning, all right? Now, what I am going to show you all is macroeconomic trading, all right? And everything that we do needs to be recorded because the only way to improve upon what you did, you have to do some form of documentation, all right? So you can see I record a lot of news and what happens so that when it comes around another time, I could improve upon it, all right? So yesterday, I haven't done my documentation for Australian dollar news. I'm sure a lot of you all didn't know, but the Australian dollar moved a lot yesterday, and I caught all of it. All right. And today, I'm about to do my documentation, all right, for my pound pairs, the pound news, right? This is how your documentation should look. The date. You want to say what type of news and the quantity of that news impact level that came out. Take a screenshot so you have it for future purposes. Write a quick conclusion on what happened, right? With the pair, basically, the one that controlled the movement. You want to do the effects, okay? In terms of basically how many pips did each move. You want to put the spread, very important, put the spread. So you know which ones to trade and which ones not to trade. You calculate them on the pips they move, and you write some notes, okay? So I'm gonna do this after this video. But for now, let's get back to the pound pairs, all right? So I told you I'm gonna go through this. And we're gonna look at the most popular pound pair, okay? The dragon, which is GBP yen, all right? Great Britain pound yen. So the first thing I'm gonna do is look on the month time frame. Right? Look what's happening. Look at the overall trend of the pound. Okay? It was in a buy trend, but if you notice, There's a trend line right here on the monthly. Okay. If you all don't know what a trend line is, IML Academy. All right. It's basically a level of support that price will come and check over and over as it follows its trend, right? The trend is your friend, okay? All of this was in a trend. So one of my first cues was that, hey, price kept bouncing on this line. It went up. At some point, it needs to come back down and retest this line, right? So without even reading up on any news, I have my first confirmation for dovish, my dovish views or my bearish, my when I thought the news was going to be bearish, right, was based on price coming back down to check this trend line on the monthly, right? You go down to the weekly chart, right? Get a little more in depth as what's really happening. You could see price is coming and checking this line over and over, right, guys? Let's go down to the daily now. Right, just an even more enclosed view of what's happening. Okay, you see price is coming and checking this line over and over and over. All right, now let's go down to the 4-hour chart. Okay, and this is where I will stay. Whoa, what happened there? Oops, this is where I'm gonna stay, and there's a reason why I'm gonna stay here. All right, oh, you know what, I'm gonna go as low as the hour chart or 2-hour chart. Okay. Now, a lot of y'all didn't understand when I said the concept of filling the wick, all right? Filling the wick. Very important concept when it comes to trading, okay? Because filling the wick, all right, is really based upon a concept called momentum. All right, guys? Momentum or velocity, all right, behind a pair. Now, this morning, when when news was about to come out, the first thing I noticed, right? The first thing I noticed on the 2-hour chart, right? And I could go as low as the hour chart, whatever. Let's go to the hour chart, okay? The first thing I noticed, right, was that the EMAs, actually let's stay at the 2-hour. I don't want to go to the hour yet. On the 2-hour, the EMAs, right, the exponential moving averages for the pounds were beginning to cross. This might have slipped a lot of you, but you see when EMAs cross in a high time frame, whatever direction they cross and are turning to, that pair is going to sell, or push in that direction aggressively. All right, so you always want to keep your eyes on the 4-hour chart too, because the 4-hour chart, right here when they crossed, tells you a lot, but 2 hours is sweet spot, right? 2-hour chart is where you really get that nice entry, right? So they crossed right around here during London session, right? So it's 4 a.m. my time, right there, right? So this was right during London daybreak. Whoever caught that, I was asleep because I didn't really care because I was going to trade this news, but whoever caught this right here made some good money, all right? This was about, it was a good 45 pips this morning, 45, 50 pips, whatever, right? Now, when news came out, right, it was, due to the quantity of news that came out back to back, okay, 10 high impact or high level pound news coming out at the same time, all right, what that was going to do was, it was going to create some level of volatility in the market. So what happened, it went up about, I think, 50 pips, about 50, okay, my gosh, it went up around 67 pips, guys. So whoever was in a buy saw a lot of blue on their phone, and then boom, price fell down and went down. What is that? 220 pips today, right? So look at this. Why did price turn around? Well, price action, basically. There's a 4-hour resistant line right here, ceiling, right? Price tried to go through it and couldn't go and pull down. What are some of the confirmations that price would never pass this line? Well, look what it did in the past, right here, right? Price wicked a lot of vectoring, right? A lot of vectoring to the downside and to the upside right around this line, right here in the past, right around here, guys. So that showed me that this was a major ceiling on the 4-hour chart, right? Now, when price sold, right, this is what happens in news, and this is what I'm here to explain, basically, the concept of filling the wick. A lot of people don't understand this. When price sold, right, and was moving 100 miles per hour south, okay, guys, moving south 100 miles per hour, it came and it hit my trend line, all right? You'll see these lines right here. Let me show you. Let me go back out to the 4-hour chart. These are my 4-hour trend lines. Price is moving within a trend, right? Y'all need to observe this, right? And look how, to have a respectable trend, price just has to touch it 1, 2, 3 times. But price touched this once, twice, third time, fourth time, fifth time, sixth time. This line is very much respected, all right, guys? Very much respected. So this was a resistance point that I had to look for. Now, at the same time, I have a monthly floor right through here, all right, which is another very respected support, all right? So on the 2-hour chart, you could see exactly why price pushed down and pulled back, retraced right there, right here. It retraced, all right? Let me change my cursor to arrow. It retraced right here, right? So what price did? It sold for about, what is that? 148 pips, and then it retraced, right? About 20 or 30 pips, right? About that. Okay. Now this would have scared a lot of people. This retracement, a lot of people would have jumped out in profits. But you need to understand the concept of momentum. You see, when something is falling or shooting up 100 miles per hour, guys, that's not going to stop. All right, that is not going to stop. Right, more like 200 miles per hour. All right, don't know how to do miles per hour, but this is miles, not meters. Miles per hour. All right, guys, that is how fast price was traveling. All right, it is selling. So when I told y'all, don't let price fake you out, do not go long, do not buy, because why? Price already, here's the confirmations that I had. Price already broke the monthly right here, convincingly broke the monthly. Okay, my trend line is respected. However, look at the EMAs. If you don't know what EMAs are, simple terms. EMAs address strength. They are just strength indicators of support and resistance, okay? That is all they do. So when they cross and they push price down, the wider the gap is between your EMAs, right, is the more it tells you the strength behind this movement, basically, or how strong this resistance on top of it is. So when I saw this, right, price basically